And welcome to this episode of Derek Invest. I'm your host, Derek Miller. What I want to talk about today is what happened last Monday. All right, because now we're finally getting all of the excuses and the reasons that the VIX moved 40 points in one day. Um, I use the word excuses because, we're going to talk about this now. Why do I use the word excuses? Okay. It is really simple. I've been doing this for 25 years. And let me tell you that maybe what happened on Monday couldn't have been calculated exactly. You couldn't say, oh, the Nasdaq's going to open up down 5.5%. The S&P is going to open up down 3%. All right, maybe you couldn't come up with those exact numbers. But let me tell you what you could do. And I did do. If you want to go watch my episodes. So last Monday, go to the previous Saturday, just 2 days prior, and see that I tell you that we will have a market drop and then we will have a bounce and then we're going to go back up to the highs. So I hear all these excuses, different reasons that things happen. But let me tell you something. This is what I know, okay, or what I've seen, all right? The same patterns show up, whether it's over a long-term time frame, an intermediate-term time frame, a short-term time frame, the exact same things. And I don't mean patterns like head and shoulders and things like that. I mean behaviors. The same behaviors seem to happen over and over and over and over. And what I can tell you for sure, what I do know, let me get my light back on. What I do know is that there are strong hands in the market, and those are the people that have all the money. That's Wall Street. That's your trading desks. That's your traders. That's all the professionals out there working. And believe me, the money that they have, that even includes the Fed, okay? This all goes together into one system. And they hold all the money. Nothing can really happen unless they want it to. Aside from maybe a couple of the really big glitches we had in 2008. And I'm only saying 2008. I think, in my opinion, the only real crash we had was the one that was in September. I think that might have got away from the strong hands in the market. I think it might have. And the reason I say that is some major institutions went under, and then there were some major institutions that were really close. But what went on from November through March of 2009, I think was in control. I mean, you may think, if you think that sounds crazy, I might not be the guy for you, because that's my opinion on what happened then. I do think that there was some slippage and it maybe got out of hand, but all in all, I think primarily in control, not out of control. Okay. Now, how can I say that with such certainty? Well, I can say that because we sat at market highs for a year and a half before we had a crash that no one expected. Okay, if no one expected that crash, how do we sit at highs for a year and a half? Why were we down 22% in the market? AIG had already announced they were going to have to file for bankruptcy if it was so unexpected and there was a crash. And you see this stuff play out all the time. Maybe not as big as 2008 and 2009, of course. That's kind of unprecedented, aside from the tech bubble in 99. I mean, that was just as big for the Nasdaq. And you got all your reasons as to why that happened, right? Now you got the reasons as to, oh, well, in 08, it was this and that. And it goes on and on and on into 2020 where, they talked about COVID and fear and so on and so forth. But I can tell you the same scenarios play out over and over and over again. Why was 2008? I had only been in the business for about 5 years. Why was it so easy to spot? Because you just do not sit at highs like that, at volume, at trading, unless there is major selling going on. Because I agree, the strong hands of the market, they are not buying at the highs. So when you're sitting up there and you have huge trading activity, there's something wrong. Okay? So you could spot that. Well, what happened in 2020? They just went up. That's all. That's why you will never come off of a high and just go straight down like that. Never. Let me explain to you why. So let's just talk about conceptually, why is that? Why doesn't that happen? Okay, I'll tell you. We can make an analogy known to man. I'm on one side of the table. You're on the other side of the table. Okay, I have $10 million, you have $1,000. And it doesn't matter what we trade. Cups, glasses, coffee mugs, doesn't matter. You and I, we trade coffee mugs, okay? On my side of the table, I have 20 coffee mugs. On your side, you have 5. Now, what I want to do is I want to consistently drive the price up of coffee mugs so that you'll continue purchasing them. And then I simply want to buy them back cheaper, okay? You have $1,000, I have $10 million. So if now finally, okay, so you've spent $900 of your $1,000, you have, $100 left, and you had 5 mugs, now you have 10. Okay, so now you have 10 mugs, but you only have $100 left, right? And I can see I don't know how much money you're holding, but what I can see is you're slowing down and how quickly the bid was going up. So we had started off and you would quickly go to 100 on a coffee mug. You didn't care, 200, 300. Now all of a sudden you're starting to move in nickels and dimes. So I can see, we're coming down to he's running out of money. And see, once you start running out of money, I got you. Because let's just say that the coffee mugs, if we, average price was $150, high price was $300, low price was $50. So right now we're sitting at $150. Well, you have to build up your cash position again. You have to, right? You just do. Now you have 10 mugs and I have 15. So what will I do? I'll say, well, I'll tell you what. I mean, I have enough coffee mugs and we're doing this virtually, of course. I'll give you 95. So I put a bid in at 95. So I brought the price down from 150 to 95. Well, and then you're thinking, oh no, how the heck how did the value fall that fast? Now I'm sitting here with these 5 mugs. I have an average cost of 150. You're going to start to panic. And guess what? You might lose faith. I'm going to have to turn around here. You may lose faith in the coffee mug market. Now, I cannot have that happen, okay? I cannot have you lose faith. So there's no way. Hold on one second. I'm going to turn around here. Apologies for the lawnmower you're listening to, but I'm on a golf course. Okay, so you'll lose faith in the coffee mug market. I can't allow that to happen. So what I'm going to do up at those high prices, like when we're up there, the high price was 300, the average price is 150. I'm just slowly going to I'm going to leak off price very slowly. So it slowly drops. Then I'll pick it back up and I'll sell you another one. I'll pick it back up and I'll sell you another one. And then once I want you afraid, once I know you're out of money, that is when I will decimate price very, very quickly. Down, down. Why am I doing that? Because you're selling to me cheap. That's what I want. So that'll happen really fast. So a lot of times what you'll hear guys say is bottoms are very sharp. They're in a V formation and tops are flat. There's a reason for that. Because the whole time price was falling, me, the strong hands, I wasn't a seller. I was a buyer. You were the seller. So if you can conceptualize that idea of money and why I would take my time at the top to sell off to you, because I want to get the best price. When prices actually start falling, I'm a buyer, not a seller. You're the seller. The weaker hands in the market are the seller. And what you could see coming into last Monday was a couple of things. One, we didn't sit at a high long at all. We didn't sit there. Now that doesn't matter because as we zoom in on time frame, if you're working off of a 15-minute chart, for example, which in the summertime, that can be 10 trading days. You would use 15-minute chart to forecast the next 10 trading days because trading is late in the summer. So if you're working off of a 2-week time frame, so you're looking at a 15-minute chart the summer, if it sits up there on a 15-minute chart for 2 weeks, that's a long time. So that indicates to you that there's going to be a minor correction. Maybe that's somewhere between 2 and 5%. You come out a little more into 30-minute chart, and it does that same thing, right? It sits up there on that 30-minute chart. maybe you're looking at 5 to 7%. And you can see where I'm going with this. Now, if you pull up a monthly chart, you have high trading activity and you've been sitting up there for 18 months, 15 months, a year, 6 months. That's going to be something big. That's something bigger. Do we have that recently? No. And I've been preaching this over and over and over so that people that look at these things, if you go back to my live streams over the past couple of weeks, I've been talking a lot about what a top looks like because we didn't even have a top at all. I mean, it was minor, right? Like in this case, it was on a 15-minute chart. And I think the 30-minute chart showed a bit. We can look right now and I can tell you. But where I was looking for the market to drop, where I was looking for the Nasdaq to go, was only 2% above where it actually went. So what happened? Was it liquidity? Some people are saying it was liquidity. Some people are saying the VIX, the fear index, really didn't jump 40 points. And they have a lot of reasons for why. But I have news for you. It did jump 40 points. That's just simple math. You can see it, right? How does an index open up down 5.5% if the people in control aren't doing that on purpose? And believe me, there are strong hands and there are weak hands in this market. It's easy to see. I've been doing this for 25 years. All right. I'm not a mystic. I don't read minds or crystal balls. But I could tell you that market was coming down just within 2% of where it came to. And if you have been in my mentorship program or you have worked with me one-on-one and you understand risk management, cash management, and investment management, not only were you prepared for that move, but you still had 5% cash left to leave in Monday morning when it was down 5.5%. And I guarantee you put that money in. I know 2 of my students did for a fact, but you know how hard that was for other people to do that don't understand? That go, oh no, it's down 5.5% in the morning. What do I do? Well, that's the whole point. That reaction is the point. Markets move by human beings. Human beings operate on emotion unless they have a steadfast discipline. Without a steadfast discipline, times like Monday morning will get you. They don't get me. I was a buyer. I can show you what I was putting up on Monday. And I'm not a bull. I was being called a bear for I don't know how long. I mean, I'm not a bull or a bear, right? When prices are high and trading activity is high, I am a seller with the strong hands. They're sellers too. When prices drop, and if they drop like they did on Monday, if I see a 5.5% down day, a gap down, my mouth is watering. Unless we are in the middle of a real situation. If AIG, for example, had filed for bankruptcy or announced they were going to file for bankruptcy 4 months ago and the market opened up down 5.5%, first off, I'm already out of the way. But if I wasn't out of the way, I sure am now. So let's jump over and let's look at some charts and let me show you. Let's put some charts behind this so you can understand. Oh, what is high trading activity? What does it look like when it moves up? I'm going to go through it again. We'll take a look at the 2008 to 2009, and then we'll take a look at what we've been dealing with here. We can even take a look at COVID. We can take a look at 2021, which, by the way, was another easy one to see. Another easy price drop. Because if you're focusing on trading activity and you're focusing on high prices versus low prices, look, you only need to know notionally if it's high volume or not. I remember in 21, it was the first week of December, and volume, which is your trading activity, was up 300% or 400% compared to its average. Folks, this is enormous, especially during the holiday season. This is enormous. It was a blinking light to get out of the way. All right, I hope you're enjoying this. I know a lot of times what people just want to see is what stock's going where, what's the price target, when's it getting there, same with the markets. I have a lot of that stuff out. Feel free to run through my Twitter. If you are not watching this on Twitter, here it is right here. Here's my Twitter handle, Derek Me, DEREKMI 752-63605. My Twitter is Honest Trader, and then you can always email me at dmiller@promethean.investing if you have any questions. I guess there were some problems with my email over the last few days. I don't know. I got it worked out this morning. My host is Wix, and I don't know what went wrong. But in any case, email's up and running again. Also, you can go to MillerDerek091 at Gmail if for any reason my Promethean Investing email is down. Sorry about that. We're getting a little humid out here, so the bugs are out to play. All right, let's jump over. Let's take a look at some charts. I'll show you what I'm talking about, just so you have some visuals here. And then I'll probably do another. I will probably do another live broadcast later today, where I go over some price targets and what I see coming. Nasdaq. Let's go. I'll tell you what we're gonna do. Let's go ahead and take a look at the S&P. See, this is what I mean about price getting pulled down quickly. These are monthly bars. I'm on a month. Now, as you can see, this is not trading activity. This is not high levels of trading activity, but price falls from, 475 to, I think it was like 423, something like that on Monday. I just have to tell you, price doesn't pull off like that. Now, price has to come back and revisit these highs regardless. So is 400 in the cards? Yeah, not yet. Not yet. What did I tell you about prices and selling? Prices will stay at a high for a time period, depending on what the chart looks like. It'll stay up there for a little bit of a time so that the actual selling can occur. Now, if you look at last week, does last week stand out to you? It should. It should. You know why it really should? If you're looking at this, because this is 2021 highs, this is the lows, and the amount of trading activity that took place last week is in line with some of the highest trading activity that we've seen in the last 3 years. Okay, well above what we've seen for the last from 2023. So well above those levels. So could this be the start of something? It could be, and you should be aware of that. This definitely could be the start of something. You should be aware of that fact. All right. Now, what do you need to do? So you see this huge drop. Look at this huge drop. You see this huge drop, and now you have a big bounce off the bottom. So the first thing you know is that strong hands came in and started purchasing right away. Of course they did. The market was down 5.5% at the open. What do you think they're going to do? They're certainly not selling. And now you have to say to yourself, okay, I need some price targets. Where should we go back up to? Well, I would say that your 475 is an easy target, but see this big gap up here? I'm going to zoom in a little bit. And the reason we zoom in, folks, is so that we can figure out price targets, target dates. And what I want to show you is this: how you know what went on was not out of control in any way, and in fact, very much in control. You can always pull up the gaps on indexes. Gaps, for those of you that don't know or maybe tuning in for the first time, are areas on a chart where price doesn't flow through. It opens up down, or it opens up. In this case, it's down. And when charts get really gappy, that's usually strong hands looking to institute fear. So let's go down. This is the gap last Monday morning. There we go. Now, there's something I want you to notice, okay? And that's real simple. So we have this initial gap, but the gap doesn't fill. What does gap filling mean? What do I mean when I say a gap fills? First off, on indexes, it's nearly 100% of the time, all right? Just so we're clear. Price will rise back up to where it left from. See this bottom line right there? Price will fill back up to that point, okay? That is a gap filling. Now, if you notice, as price fell again, we have another gap. And what is being attempted here is generate fear, okay? The weaker hands, retail, the people that just don't have as much information is the truth. They just have less information, and they have less discipline behind them. And then you're very, very much handicapped on this side of the table by the amount of money that someone has to use against you. But the good thing is, with that level of cash with the ability to buy and sell at the volume that strong hands can, they're easily identifiable, and you identify them on a chart. I mean, look at that volume now. Woo, baby. Okay, so price gaps down again, but it wasn't enough. And apparently the strong hands are well aware, because this time it does fill. Price fills. The gap fills pretty much. And then as you can see, drop, gap, drop, gap. Now, has this gap filled yet? No, not yet. Did this initial major gap, that one that we had last Monday? Yep, it already did. So what you're going to say to yourself is, if this is the real thing, if this is going to be the real thing, then price is going to come back up to 490, certainly. The reality is it's going to come back up to 494. But what I tell all of my students, everybody I mentor, don't get greedy. 490 and 494, look, that's a percent, not even. All right? And this is when you have to know how to manage the investment, manage your cash, and manage your risk. The risk reward isn't here. What we know right now is, if this is going to turn into something, we're going to come back up here to this 494 price. We're going to fill that gap. Okay. If this is in fact meant to be a larger correction from where we sit now, we're going to zoom out on this chart, because I want you to see where I'm talking about. What's our downside? Your downside is going to be somewhere in there at 410, 405, something like that. That would be your downside. Okay. And that's why when you were at 423, it was an easy buy, because you're only talking about 5%, 4% below you, right? But what did you have on top of you? 15. So this was an easy time to buy. All right. It was the easiest. That's just an easy time to buy. Now you see this bounce. So when you see volume like that, you say to yourself, odds are we are running back up first. If this is going to turn into something, and I'm not telling you that it won't. I'm not saying that it's not going to. What I'm telling you is we don't know yet. All right. We don't know yet. We know what's below us. You know, you're down there at that 423 or whatever that was. That's below you. And then below that is the previous high that sits at 405. But first off, you should have a little bit of a short on right now. Anyway, you should have a short and a long. I can explain that, but that's risk management. You should have that. However, if you don't, and you say I'm playing to the upside, because there's a lot of people that are buy only, they don't go short, period. Well, you're looking at 490. When are you looking to achieve 490 buy? Like, how long should this take? Well, your drops are precipitous, and your rises take a bit more time. So if you come back here, you say, how long did it take to drop? Well, this is July 11th. That's August 5th. You're looking at, call it a month. All right. Call that a month. So how quickly should you rise? I think you're probably looking at 6 weeks to get back there. I mean, we're on a 4-hour chart, and it's pretty plain to see on a 4-hour chart. It depends how quickly volume steps back in, though. If this is going to be the real deal, the rise here could be very fast. You'll notice that I put last Monday, I put as us getting back to 490 on the Nasdaq. And the reason I did that is because monstrous volume came in. And let's face it, the Nasdaq has already risen 6% in a week from the lows. All right. So this could be very, very quick, folks. Very, very quick. Now, again, for exact price targets, my students obviously have them. And there's a full plan in place. I share with all of my students and anybody taking my mentorship exactly what I'm doing within my own portfolio, so that as you learn, you get to look through my eyes. But for now, what I wanted to do, because I'm hearing all the excuses now and the reasons why that happened, and how, the flukes like that happen, and all this stuff, listening to that for 25 years, I had to share this with you. And I know this isn't exactly what everybody loves so much. What people really want to see is price targets, stocks, indexes, target dates. I know that, and I'll probably do one of those for you later today. But for now, I hope that I shared with you information that maybe just open your eyes just a little bit to the possibility. Whether you believe it or not doesn't really matter. You can go through and um, look at my live streams. I don't take any down. You can look at my charts and you can see the accuracy level that I work in. And not only can you see the accuracy level that I work in, you can see that it's always forecast well ahead of time, as this was too. Now, I must be doing that somehow, right? So maybe this just opens your mind to the possibility that, yeah, that, cash flow and the way you measure cash flows via trading activity, taking place via the strong hands and the weak hands, manipulating emotions. If you can just open your mind to the idea that that's how this works, then that is how this works. Then you will see what I am telling you is more than accurate. All right, so I'm using a camera and a microphone. Good. Sorry, I just had a camera warning come up for some reason. So listen, everybody, I hope you enjoyed that. I may be back later today, and I'll get some charts up and some price targets. And if you go back and look at where we're headed now in the indexes, I already had those up last week. But I always like to do new stuff every day, and I'm always trying to come up with something new. So, all right, thank you so much for joining me. Remember, if you're not good up here, you're not good anywhere. If you're feeling a little down today, maybe you're struggling a little bit, get outside, smile, fake it till you make it. You haven't failed yet, and I know that. I know because you're still here. All right, everybody, remember, every day above ground